So really now we are seeing week on week competitive bidding situations constantly for best in class properties. So we're feeling very buoyant about the market.
Hello, welcome to Yield TV. Today I'm talking with Hannah Aykroyd and Sophie Bonsor from Aykroyd Co. Aykroyd Co is a London-based property advisory company focused on prime central London real estate. Good to see you today. First of all, tell us a little bit about the background and history of Aykroyd Co.
Brilliant. So I'm Hannah Aykroyd, Managing Director. I set up the company just over 2.5 years ago, and Sophie and I actually worked together at our previous firm, Van Han. And we focus primarily on advising clients on acquisitions, but also rental searches, and we also manage properties as well. We're based in Mayfair and focus on prime central London, and we're a sort of small, tight-knit team of 7, but with sort of discretion and some very high levels of service to our clients, being at the core of the business.
So how is the prime central London real estate sector holding up in the light of the COVID-19 crisis?
So in March, we saw £82 billion worth of sales put on hold. So we were all very worried about the situation. But then since lockdown has eased, in June alone, we've seen the highest number of sales agreed in 20 years. So we're very positive now about the situation.
Was it possible to continue viewing properties during lockdown? Are there some solutions available for remote viewing?
100%. We're actually carrying out our 5th remote transaction this year alone. And it's something that we've always done. And really a huge part of our service is building that trust with our clients, that they really believe in the advice that we're giving them. And we are here to be their eyes and ears on the ground at all times and ensure that we're pointing out both the positives, but importantly the negatives as well about a particular property, protecting their interests, and making sure that they're really only focusing on the very best properties within their budget at any time.
I'm going on Thursday for a client based in the Middle East to look at a property in St John's Wood, and I'm going to have him on a Zoom call so that he can look outside the window and make sure that there's not a street lamp outside, bringing in a glare in the night, or commercial bins outside, all these little extra things that you don't see in a tour or a virtual tour carried out by an estate agency. We look out the windows, we make sure that the common parts are very nice, or all these little things that only a human really can do. And with all the technology that we have, we need to work hand in hand with it.
Exactly, and with our strong track record in the market, we're currently ranked in the top 10 buying agencies across the UK. We do have a lot of gravitas with the agents. They do want to be working with us, and the way that we present our clients as very focused and committed buyers is hugely important. Then they know that we can transact quickly and into agreed timescales. And that all sort of helps us with sort of negotiating. So even when our clients haven't actually physically viewed the property, but we have, that's sufficient for the agent and also for the vendor to take comfort in.
So bringing together the amazing technologies that are available nowadays to be able to look at a property from overseas, you also bring in the trust element that you're there on the ground, looking out for things that they might miss even if they were there in person.
Agreed.
For example, I'm based here in Hong Kong. If I wanted to have a look at properties, you can provide that service remotely.
Absolutely. So one good example at the moment is we are working with a very long-standing Hong Kong investor of ours, and we bought multiple properties for him. We've actually just bid on a 32-unit triple freehold block for him. And so we're sort of in the process of negotiating on that. And there's a really interesting planning plays, and it'll be a long-term hold where we're really adding value to the block. And that is just a really exciting asset that we're focusing on for him at the moment. And as I said, we've already bought quite a bit. But he's not here, he hasn't viewed it, and that's really down to the strong working relationship that we have with him, that he feels comfortable proceeding with that.
So I understand that you're also able to help advise on lease extensions. This seems to be quite a good way for investors to add value to a potential property investment.
Absolutely, we hold huge weight to this. What we try and do for many of our investors is actually focus on unmodernised properties with a short to medium term lease. So we're looking, anywhere from 5 years to say 30, 40, 50. And the reason for that is that you end up saving on stamp duty because the total sum purchase from a stamp duty perspective is a lot less. And then also because you're adding value through the refurbishment, which again we would oversee and manage for you, you should be adding value there as well. So you're getting really sort of 2 bites of the cherry. And then the third bite is actually the total asset value once you have a long lease and a fully refurbished property will be worth a lot more anyway. So that's a really important investment angle that we like to pursue.
And for overseas buyers, are you able to help them with sort of lifestyle decisions as well? For example, advising on sort of education, schools, things like that?
Absolutely. This is a completely holistic process. One of the main factors and drivers of why people want to buy in the UK is often education. And we work with many education consultants together with our client to decipher exactly where they need to be in terms of location of schools or universities. It's hugely important. And even if they're looking as an investment for 5 years and then their child is going to come over to the UK, we want to put them in the best possible position so that perhaps it could be close to university so that students can rent it in the meantime until their child comes over to the UK. So yes, it's very important.
And that brings me on to the next question, which is, where in London should people be looking to buy for the best chance of sort of capital appreciation and the best yields?
Well, you're not buying in London for a massive yield, to be clear. Really, the focus needs to be about long-term hold, and we say that sort of 10 years plus is really what you should be aiming for. And the gross yield will be about sort of circa 3 to 3.5%. So net, you're probably looking at sort of 2 to 2.5 to be realistic by the time you've taken fees and tax and into account. But in terms of the areas to focus on, we're very excited about north of Hyde Park, and there is an area called Queensway, which is undergoing a huge amount of regeneration there, with 3 big landowners working together. You've got sort of 6 Senses that's going into Whiteley's in the north part of Queensway, and so the ripple effect there is going to be huge throughout sort of Bayswater and sort of Lancaster Gate area. That's a really sort of undervalued pocket at the moment. Equally, there's a big regeneration taking place in Earls Court, and again, the ripple effect from there, sort of bleeding into the Royal Borough of Kensington and Chelsea, will also be huge, and that's really going to be a sort of 15-year project. But again, we always advise on looking at a long-term hold.
And in terms of what type of properties you advise your clients to buy, do you advise them to look at new builds or period properties?
We're very open. We will look at the entire market and really, once we've understood the brief and what the client really wants for the long term, we will encompass both new build properties and also period properties in that search. And I think an important point to note is that we are here on the ground. We are previewing new developments and properties every single day of the week. We have very strong views on which developers are the best ones and which ones to to avoid. Are some developments sort of marketed as being in one of the better areas, but actually it's in an adjoining postcode which is substandard and should be best avoided? Are the amenities good enough for that development and for that area? And importantly, for that sort of target rental market as well. And the issue sometimes can be with a new build development is that there are so many new units that really, there is no rarity factor there from both the resale perspective, but also from a letting perspective. So you can be facing quite huge void periods, which clearly is going to affect the yield. From a period property, we do feel in the long term that there was just a lot better capital appreciation there. Those properties have been in the ground for sort of many, many decades, and it's a huge amount of different types of buyers will want to be buying a period property, whereas with new builds, sometimes you're restricted in terms of your sales market, your eventual sales market.
And in terms of who you represent in the deal, do you represent the seller or the buyer?
So we are completely independent. We do not sell properties whatsoever, and this is a hugely important driver in our business because we only act for the buyer, and therefore our fee is actually paid by the buyer. And the reason being is that, or the main reason is that around 50% of the properties that we source are off market. Now, if our fee is paid by the buyer, the estate agents have no concerns with allowing you to access that property before they might have even signed a contract with that vendor, because it's not in our interest whatsoever to sell that property. So that's a huge factor. Another reason why we charge the buyer and don't take our fee from the vendor is that we want to get the lowest price possible for that.
And has Brexit had any impact on the appetite of overseas buyers?
Not particularly. We've been quite surprised, but no, since we had the referendum in 2016, the main issue actually has been a lack of really good quality property coming into the market. So transaction levels have certainly softened, but then on the back of that, we had also the threat of Corbyn, which was a huge risk here. There were a lot of people who were ready to take flight, but thankfully we had Boris Johnson come in with a Conservative majority government in December, and then on the back of that we've had a huge bounce prior to us going into lockdown on the 23rd of March. So really now we are seeing week on week competitive bidding situations constantly for best in class properties. So we're feeling very buoyant about the market.
And I think if anything, with Brexit, our currency has weakened, and therefore actually with international clients we're even more attractive, because with 20% drop against the dollar, and also with the drop at the higher end on property prices, they can often get a kind of 40% discount. So it's an attractive place to invest still.
And given that London has been a sort of centre of commerce for the past 1,000 years or so, a little thing like Brexit isn't going to stand in the way.
So certainly not.
Tell us a little bit about, are there any sort of tax incentives at the moment to encourage people to buy in London?
Yes, so we're pleased to hear that the UK government last month introduced a stamp duty holiday, and this applies to the first £500,000 of a purchase when you complete up until the 31st of March 21. So that's very positive, and that's really kind of helped spur the market over the last month or so. But it's really important to note for any non-UK based buyers, we do have an additional 2% stamp duty, which comes into effect on the 1st of April 21. So this really is the window. And when you think about the length of a standard property search, it's usually around sort of 3 months. With us on board, we try and obviously shorten that for you, as we're doing so much of the work, we're here on the ground. But really, the timing is getting a little bit tight to sort of make the most of the stamp duty holiday, and then also to be buying before that increase comes in as well.
So investors who are interested in central London prime real estate should hurry up and get in touch with you guys.
Absolutely.
Fantastic. Well, that's been very interesting talking with you today. Best of luck and speak soon.
Thank you very much, Leo. Thank you.